All right, guys, we are pumped to have Samir on the line here. He is from Hashdex ETFs. They've got 1.2 billion in assets. We are in the midst of an absolute market meltdown in front of us. He's in the crypto, the ETFs they manage. What I'm going to do here is just say thanks so much for coming, Samir. Appreciate you.
Thanks so much, Taylor. It's great to
So,
be here.
yeah. What we'll do here is we'll talk macro for a second. Just get your thoughts on the hot dot right now, man. It's Trump tariffs, it's reciprocal tariffs, whatever you want to call them. Let's talk about that. And then once you kind of give me your broad thoughts on that, I'll kind of back you into crypto and giving us your broad thoughts on what the heck's going on in the crypto space, et cetera. I've been super impressed by the way it's holding up. But we'll get there. What are your thoughts on the broad macro landscape right now? What the heck is Trump doing? Is this positive? Is it negative? And it doesn't have to be too political. We're looking at things from an economic standpoint here.
Yeah, no. So I think we're living a regime change, right? So this new Trump administration, like he's looking to change a lot of rules of the game, right, in terms of geopolitics and macro, and this causes uncertainty, right? So markets hate uncertainty. So during those periods, there's a lot of volatility and a flight to quality in general. So especially right now, like we're just absorbing the effects of this new tariff policy and all the repercussions, like the retaliations and what that's going to have, and where that's going to end, right? And what's the end goal here? So I think there's still a lot of uncertainties, and this is reflected in how the market is behaving. So we don't know, like the real impact of those tariffs in the economy. We don't know the impact of the retaliation in the economy, and all the impacts that this is going to have, like with global trade as a whole. So there's a lot of unanswered questions. I just saw recently Trump was tweeting, asking Jay Powell to reduce interest rates, with
Yep.
so interfering directly into the Fed's mandate. So there's a lot of uncertainties. Markets don't like uncertainties, and that's why we see this big volatility in the market overall. On this moment, we always like to go back to the fundamentals and look at the fundamentals of what you're investing in, of the technology, especially when we look for crypto specifically. The fundamentals are only getting better, and especially with this new policy of the U.S. administration towards crypto. So I know it's a very uncertain moment, but for long-term investors, we can see this as a very significant buy opportunity.
Yeah, it's interesting. So I'll comment on a couple things that you made there. So we went from the market was pricing in 2 interest rate cuts to now pricing in 5 interest rate cuts. So the market's telling us there is watch out, a recession's coming. The market's priced a recession overnight, and rightfully so. If we do have these tariffs stand, this will cause a recession, I think, in all likelihood. What's interesting is I have for a long time been a believer in something that is being debunked right now in the crypto space. My longtime belief has been that directionally, crypto trades with stocks to a higher magnitude. So if stocks go up 1%, crypto goes up 2 to 3%. If stocks go down 1%, crypto goes down 2 or 3%. This is the first time in a long time you have seen the correlation come apart. Crypto is not going up per se right now, and Bitcoin specifically is the only thing I track, but it's holding water incredibly well. And I'm shocked. But going back to your point, if you're actually looking at fundamentals of things, the reason stocks are selling off is because the economy might weaken and corporate earnings might get hit. What's the impact of tariffs on crypto?
Yeah, no, that's a great question. So stocks are going down because this is going to have a direct effect in the revenue of the companies and revenue projections of the companies, right?
Correct.
So crypto is not subject to the same effects, right? So it is a risk asset, so it will suffer from uncertainty and will suffer from capital restrictions. But if we are in an environment in which we're changing the expectation from 2 cuts to 5 cuts, that's good for risk assets, right? So it's an environment in which crypto will benefit from it. So that's why we may be seeing mixed signals, because like recession is bad for the economy, is bad for stocks, right? But the effects of the recession, which is the drop in interest rate and like injecting money in the economy, this is good for risk assets in the long run. So crypto is not affected by the short-term impact in the revenues, and is affected by reducing the cost of capital, reducing the interest rates. So I think that's why we're seeing this mixed signal. And also, if you look again to what's happening with crypto right now, with this new administration, the change in policy towards crypto, and how the projects like are moving in Congress related to crypto, we have a lot of reasons to believe that in 6 months from now, as we see like Stablecoin Act being passed in the Congress, as we see more clarity coming from the SEC, we're going to see a new wave of growth into crypto. Okay, and so I think all those things are playing out at the same time. So it's a very confusing moment overall.
It certainly is. The market doesn't know what to think, up to down. So let me peel apart two portions of that. Let's start first on interest rates. So the thought of lower interest rates being stimulative to an economy, having more money in people's pockets because they can get cheaper access to capital, and so that being a positive light for crypto at the end of the day. The other side of that, one could beg the argument that a recession, which drives interest rates down, is going to have less money in people's pockets at the end of the day to spend on crypto. So is it fair to look at that as a wash?
So the way you could think about this is, most of the crypto projects right now, they're very in the very early stages. Okay, so they don't have they're not used in the economy right now. So most part of their value is projected as future growth. Okay, so when you look at smart contract platforms like Ethereum and Solana, like we're expecting that in 10 years from now, 5 or 10 years from now, this is going to be like a foundational platform for our society, and everyone's going to be using it. Therefore, the scale will be significant. But then when you bring this to present value, you need to apply the discount rate. You need to apply the interest rate, right? So as you reduce the interest rate, you basically improving the cost of capital to invest in long-term technologies, right? So that's why I would say, like, although it's less money in people's pockets, investors are holding cash right now. Okay, so investors will look into those type of long-term opportunities and technology plays, especially as the cost of capital goes down.
So someone as a knucklehead like myself, explain to me kind of the future of crypto and where it's going. I see crypto right now as a risk asset. I see it as the ultimate form of a risk asset. And I see it as, hey, currently in its current state, I'm buying something with the only knowledge that, or thought that I can sell it to someone higher in the future, because there's no actual intrinsic value of capital being generated by it.
Mhm.
At what point does that become tangible? At what point are there things that crypto does to the economy where crypto actually makes money?
Yeah. So we have at Hashdex 5 different investment theses in crypto that we normally cover. Okay. The first one is specific to Bitcoin. So Bitcoin, we believe that Bitcoin is an emerging digital store of value. Okay. So this means that it has characteristics of being a good store of value. It's scarce, is hard to manipulate, it's hard to defraud. It's like very provably secure, it's portable. So there's a lot of characteristics that make it as good as or even better than gold. Okay, but it's a very new thing. It is the first time that we have a digital store of value in our society, right? Something that you can touch, that you cannot, take with you in your hands. It's just like lives in the internet. What we believe is that there is a generational shift happening in our society from a generation that grew offline, basically, to a new generation that grew with the internet, that is online first, that prefers to access services and goods on the digital space. And over time, we're going to see this transition in which this new generation would prefer to have a digital store of value than using analog alternatives like gold. Okay, so the investment opportunity with Bitcoin is that right now it is not a consensus in our society that Bitcoin can be a good store of value, and it's not adopted by governments, by financial institutions, by institutional investors as a store of value. And maybe in 5, 10, or 15 years from now, it will be adopted as a good store of value because the decision makers on those positions will see Bitcoin as a good store of value, right? So this is the big investment opportunity. This is the big risk. That's why we see a lot of volatility into Bitcoin, and that's why Bitcoin is a risk asset. Okay, so you cannot argue that Bitcoin is a safe haven right now. It might become in the future as volatility goes down, as it consolidates as a store of value. But right now, Bitcoin is a risk asset, is an investment opportunity. Okay. So
I do. Let me interject one point there. And this is, I am not a huge crypto believer. So I'm coming into this as a skeptic. That being said, this might be the case study that crypto believers will talk about what's happening right now. Crypto is holding up phenomenally well. Like, I would have anticipated crypto to be down. Yesterday it was down 5%, right in line with the market. I believe right now, and I looked this morning, it was up 1%, I believe. The market's down another 5%. Now, I could be dated in that, and it actually has rolled over, but I would have anticipated it yesterday being down 15%. And if the market's down 5% again today, another 15%. So it'll be interesting. So keep going, though. I've been very impressed with crypto over the last 2 days.
Yeah. And if you look at the signals, the fundamentals, the U.S. now has a strategic Bitcoin reserve. You have the U.S. government saying that Bitcoin is a store of value for the 21st century. So this is happening, right? So the thesis is advancing. Okay, so leave that for a minute. When you look at other crypto assets, the investment thesis is completely different. We're not talking about store of value anymore. And then we have like the second big thesis is like smart contract platforms as being this new decentralized cloud computing platform in which we could run financial applications and we can digitize real world assets. Okay. And on top of those smart contract platforms, you have the different applications, the industry that could be affected by the adoption of smart contract platforms. So you have the financial services, which I like to call the internet financial services, or DeFi. Okay, so financial applications on top of smart contract platforms. You have the Web 3.0, which is the like this evolution of the internet as we see it in a way that protects our privacy. And you have digital culture, so using blockchain for gamings, for collectibles, for NFTs, meme coins, all those things, right? So those are the three applications that you can run on top of smart contract platforms. So in the future, I think we're going to see a lot of those different applications, and the market size of this, the addressable market for those applications, can be measured in hundreds of trillions of dollars. Okay, so there's a lot of value to be created.
Hundreds of trillions?
Yes, because it's going to affect the whole economy, right? So if you can replace the traditional financial rails, for instance, for a digital first financial rails, which is what we believe the internet financial system will bring, you bring basically all the value that right now is traded on, legacy stock exchanges and market infrastructures. You can bring it on chain, right?
Yeah.
So the whole stock market will be on chain.
And do we see that as a reality, that the government is going to be willing to release the reins and have no regulatory ability, which is what crypto is bringing to market?
Yeah, so I think that's the interesting thing. What's happening right now in the US, if you look at the Stablecoin Act, for instance, the Stablecoin Act will give regulatory clarity for banks to issue stable.
Okay, talk me through that. Talk me through the Stablecoin Act. Who's proposed it? Where it's gotten to at this point? I know that it's existing. I don't have an education on it, so educate me.
Yeah, so basically, the Stablecoin Act is a bill that has been discussed for a long time, but right now has bipartisan support. Okay, on both like the Senate and in the Congress. Okay, so this bill is expected to be passed by July. Okay, so politicians are saying that they want to get this passed, like on both sides of the aisle. They want the Stablecoin Act to be passed by July. Okay, and what this act will bring is regulatory clarity for stablecoins in the US. So we will allow banks and other companies to issue stablecoins, and it will allow us to use stablecoins on our day-to-day. Okay, so stablecoins right now, they're being used on the margin, especially in emerging markets, for trade finance, for remittances, for payments. But they're
Let's back
not.
up just one step and just and walk the audience through what a stablecoin is, because I think that's probably above a lot of people's heads.
Okay, great. So stablecoin is basically a digital representation of the dollar. Okay, so it's a currency that's issued on top of those smart contract platforms in the Ethereum network, for instance, that is represented, is backed one by one to one to US dollar deposits. Okay, so this means that you can use this stablecoin. If you have a digital wallet, you can use it to make payments in real time, 24/7, with almost like real-time settlement. You don't need to wait 2 days for settlement. You don't need to pay big spreads to transfer money. So it's a real-time payment system once you have stable coins running on the blockchain. Okay, so it's just.
So let me just draw a line of delineation between I'm only familiar with Venmo, so I use Venmo, but I think there's Zelle. I think there's other things like that. What's the discrepancy that we're looking at there?
So the big difference is with stablecoin, you have like a single standard or protocol that is interoperable. So right now, if you have Venmo, you can only transfer money between Venmo users, right? If I'm not a Venmo user, you cannot transfer money to me. If I use another app, another system.
So if you have a stablecoin, how do you transfer that to me?
So anyone can create a digital wallet.
So they need a digital wallet like they need Venmo?
Yes, just an app on your cell phone. Okay.
So I guess there's my point of discrepancy of what is the difference then if I have to download that versus already having a Venmo app?
Because instead of being a company, Venmo, it is an open protocol. So it's like the difference between the email and having like a closed company that controls messaging.
Okay, I get you.
An open standard. And this open standard can be adopted by all the companies.
Mm-hmm.
So you can have all the payment companies, Venmo, PayPal, like all the different payment companies adopting this. And then you have interoperability.
And are there going to be more than one stable coins? Meaning, hey, I might want to pay you in stablecoin A, and there's stablecoin B that also can be paid, and you have to have a recipient wallet that can accept that.
Yes, but they are also interoperable. So what we're probably going to see is what we like to call tokenized deposits. So your bank deposit is going to be tokenized as a stablecoin. So this means that you have like the JP Morgan stablecoin, the Goldman Sachs stablecoin, and all other flavors of stablecoins. And you as a user can choose which bank you're holding your deposits.
Right. And I can send a JP Morgan stablecoin to a Goldman Sachs user.
Yes.
And what is the incentive for the financial institution to do so? If there's no spread they're catching anywhere, why do they want to do that?
So if they don't do that, they're going to be disrupted by emerging companies like Tether and Circle.
Okay. So how do Tether and Circle generate revenue?
So they generate revenue by investing the dollar deposits that they have in money market funds and short-term treasuries.
So they are holding the underlying asset then.
Yes.
So it is being held at an institution.
They are held at institutions, yes.
And so you do have the credit risk of that underlying company on your stable coin.
That's why
there's a fly in the ointment there a little bit. I get the value of all of this, but to make it, okay, all right, keep going.
But that's why you might prefer to have a JP Morgan stablecoin than like just any company stablecoin, because you trust JP Morgan more than you trust like any specific company. So you can choose who you're taking the credit risk from.
Okay, understood. Yep,
smart choice. Right?
Yeah, awesome. Good rebuttal to my skepticism.
Yeah, and the point is, after we start using stablecoins for payments, we're probably going to have most of our deposits on our digital wallet. So instead of using bank accounts and cash, we're going to have our digital wallets. And if if the most part of our wallet or our cash is held in digital dollars, when we look into investing, for instance, if you want return on that US dollar deposit, you're going to look for money market funds, but you're going to look for tokenized money market funds because it's going to be easy to transfer money from, it's going to be real time 24/7 to invest in a money market fund or redeem from a money market fund instead of having to redeem the stable coin for a traditional dollar deposit and then invest in a money market fund. So that's why after we see like a mass adoption of stable coins, we're going to see a mass adoption of tokenized assets. So tokenized funds.
Maybe you're getting here, but I'm still missing how this is going to circle back to revenues generated for companies that are utilizing. I get the simplicity, the ease, the movement. I get how JP Morgan and the underlying company is going to make money by sitting in the side and capturing money market returns and not paying you anything. Where does the money get then matriculated back around into Solana or whatever it is?
That's a great question. So each transaction on a blockchain has to pay a transaction fee to the network.
Okay.
And that transaction fee, it's paid in kind or paid in the native token of that network. So if you're using the Solana network, you need the Solana token in order to execute a transaction. So JP Morgan and all those other stablecoin issuers, to support a payment network on top of their stablecoins, they will need to pay transaction fees to the Solana network.
So this is taking it now, though, from a free hurdle list transaction to the realization that, okay, it might not be costing me as the user, but it's costing the institution that I'm holding my assets with some of their spread that they're collecting on me to pay for it on my behalf. And we're thinking that the end consumer doesn't care about the fact that they're paying for this. Like, let's call a spade, but it's the institution that's paying for it. It's not hitting their account.
And maybe the consumer would pay as well. But the point is, it's only a very small fraction to what right now costs to run a payment system.
Okay. Right? And so how do we know what that small fraction is going to be? That seems like conjecture at this point to say, like, this is going to be great. You have to wire money right now. It costs $25. This is going to be such a secure rail system that, you know, you can trust it, and it's going to be a small subset of a fraction of the cost. Where is the efficiency there that it's not in the current existing form?
So great point. So right now, most of the transactions, the cost of the transactions, they are like charged as a percentage on top of the transaction value. So if you do a credit card transaction right now, it's going to cost like somewhere between 2 and 5% to the right. If you do like a remittance, you're paying a spread on top of that, which is a percentage as well. When you're using a blockchain, the transaction fee is going to be fixed. So it doesn't matter the size of the transaction. If you're sending 1 cent or $1 trillion, it's the same cost. It's the same network cost. So it's going to cost the same thing. So it's a fixed cost. And that fixed cost, and this is the big challenge on the blockchains right now, those networks should be scalable enough that this cost is minimal. And right now, this is the big development that is happening on smart contract platforms. It's called like scalability. So developing scalability solutions that allow those transactions to be very cheap. So it's like coming, like, again, compared to the internet, we're like transitioning from the dial-up connection to a broadband connection, right? So with the internet, we could promise a lot of things like in the 90s about what we can do with the internet, but if you try to download an MP3, it would take 12 hours.
Right? So let me ask you then a bazillion-dollar question to any crypto investor. What happens if the Stablecoin Act doesn't pass?
So first of all, what happens if the Stablecoin Act passes? That's going to give clarity for the banks to start offering, and that's going to accelerate the adoption in the US, which is the largest economy in the world.
Boom, and crypto rolls.
Accelerate the evolution, our thesis towards crypto, especially the thesis around the internet financial system and smart contract platforms. So this is extremely bullish for crypto. If it doesn't pass, then this thesis will not evolve as fast as it could if the US were adopting this. But it is still happening outside of the US. Like I
Okay.
said, emerging markets. In Europe, you have like MiCA now, a regulatory framework for digital assets and stablecoins. So this is happening, right? The question is the US participating and driving it, or the US is out of the game? And right now, the policy of this administration is that they see the stable coins as a strategic path to keep the dollar dominance in the 21st century. And they're putting this in a very strategic position, in a high priority in the administration. So that's why we're extremely positive towards like that Stablecoin Act being approved and this being a significant driver for adoption.
It certainly seems like the administration is leaning in. I came away from this conversation much more educated. Thank you for that. Now, just in a quick short order, tell us about the ETFs that you have right now. You have one ETF at Hashdex that is Bitcoin, and then you have one ETF at Hashdex that is Bitcoin and Ethereum. Tell us what the tickers are. Tell us why someone would utilize that product versus anything else in the crypto space.
Great. So Hashdex is a crypto-focused asset manager. So we've been around since 2018, and we started the company in the US.
Early, by the way, folks. 2018 is early in the crypto space.
Crypto is an eternity, right? We started the company in the US to build ETFs, but we soon realized that the regulatory environment was not there, and we decided to expand outside the US. So we have a significant presence in Latin and Europe, okay? And our flagship product is the NASDAQ Crypto Index. It's an index that we've designed in a partnership with NASDAQ that's designed to represent the crypto market as it evolves, okay? So it has a very flexible and evolutive methodology in which every quarter it is rebalanced and new assets might be included or excluded from the index. And this is the product that we recently launched in the US that we're very excited about bringing into the US. Is the Hashdex NASDAQ Crypto Index US ETF. The ticker is NCIQ. Okay, so this product tracks the NASDAQ Crypto Index US version, which right now is restricted to only Bitcoin and Ether, because that's what the SEC has allowed to be included in ETPs. And the idea is that over time, as the market evolves and as the regulatory environment evolves, this ETF could hold more assets. Okay, more crypto assets. So it's a simple way to have a broad exposure to the crypto market. So for
investors, the S&P 500 of crypto is essentially what you've created.
We like to say that this is the NASDAQ 100 for crypto.
NASDAQ 100 of crypto. There you go.
If you're investing in technology, in growth, and you want to get exposure to crypto, with the NCIQ, with one investment, you get a broad exposure, and this investment is going to evolve. So if in the future the SEC allows more crypto assets as ETPs, this fund will rebalance automatically. You don't need to do anything. So
what a beautiful product you have there. So not only do you have right now just the two predominant players in the space, but as more become acceptable, and that's not the right word, but you get where I'm going with that. As more become, you're just going to proportionally with your fund own each one as it becomes regulatory approved or whatever the heck you want to call it. You might use a different word there, but what an awesome way to get more broad-based exposure to only the things that are deemed legitimate.
Exactly. And the version that we have outside of the US, again, that's been running for 5 years now, has 9 assets. Okay.
Awesome.
And what we believe, like I was saying, like if those different investment theses evolve, in the future, an index like this might have hundreds of assets, just like the NASDAQ 100, right? So we're in the very early stages of this technology. It's too early to call the winners. So we make it very simple so that the only question that the investor needs to ask himself is crypto going to be better in the future? Right. Is this technology something that's going to be around here in 5 years, 10 years from now? Or this is just a speculative wave, it's just like a bubble. Right. If you think there is fundament to crypto, there is a reason for crypto being better tomorrow than it is today, in 5 years from now than it is today, we make it simple to get a broad exposure to the space with only one investment.
I absolutely love it. And I don't say that to everything. If you're sold on Bitcoin, if you're sold on crypto, I love the experience that you can get people in your product. So kudos to you. And again, I'm not just saying that, like, I actually think that is a very viable way of approaching the space. I love diversification. This will get you diversification, but only in the qualified crypto assets, et cetera. So, Samir, appreciate the heck out of you. I got a true education here. Thank you so much. I went from a skeptic to a not a skeptic. I don't know that I'm a full-on believer, but I'm getting closer. And thank you for the education. You'll work on me. You'll work on me. And we'll come back in 6 months. We'll chat again.
Great. Thank you.
Thank you so much. All right. Awesome. Thank you so much. I really do think that's a very innovative strategy. And I think that that's what you guys have done is awesome. And I will, if I become a crypto buyer, I will be a crypto buyer of your product.
Okay, great. That's great to hear, and we will work on that.
Well, I gotta get going. I have a 1 o'clock, so let me roll out of here. But thank you so much. This was a pleasure, and I would love to do it again in 6 months. I don't have enough of an education on the crypto space. It's just not where I spend my time. So I'd love for you to continuously update me and update the audience along with it.
Yeah, until if you have questions, if you want to discuss things specifically, count on us. Okay, so a big part of what we do is education. Okay,
beautiful, awesome. Thank you so much. Have a great weekend.
You too. Bye.